Hello. Thank you for joining me back here for the first edition of this month's weekly Market Insight series. It's me, Buffy, the Rate Slayer, reporting for the Capital Markets Trading Desk at SunWest Mortgage Company. Latest news for this week, let me share some exciting news with you. You are invited to learn about how amazing our proprietary AI technology Morgan is exclusively on November 10th, 2022 at 5:30 p.m. in Phoenix, Arizona. This is an exciting event that will teach you how to convert your inquiries and pre-quals into closings. It's time to network with the top tier agents and producers, learn their sales secrets, and watch how Morgan can help us all reach the top and make so much more money. See the details below. So please come experience the magic of Morgan for yourself. It is easy and our team will show you how to do it. Oh, and food and drinks, they're on the house. Okay, let's get right into it. The Fed delivered its fourth straight 75 basis point rate hike this Wednesday. In his press conference, Fed Chair Jerome Powell warned again that it is very premature to think about pausing rate hikes and that the Fed would continue to raise interest rates more than previously anticipated. Yields on 10 years Treasury printed session highs after Powell concluded his press conference. The Bank of England followed the Fed's increase with an equivalent rate hike yesterday, igniting warning that following the current path might induce a 2-year recession in the coming months, but they are still going to do it. Stocks also slid after the disappointing results from tech giants soared consumer sentiment. Of the 40% of S&P 500 companies that have posted results, only 73% have beaten earnings estimates compared with 75% at this point in the second quarter reporting season. So, what else is under the surface? Well, the combination of steep Fed hikes and economic growth fears have lifted the greenback to the highest level in a few years. In the commodity markets, oil fell as weak economic data from China and its recent lockdown in several areas fanned concerns about energy demand. West Texas Intermediate futures dipped below $87 a barrel. Cryptocurrencies were also weighed by pre-Fed jitters. Bitcoin fell below 20,000. Meanwhile, the Institute for Supply Management gauge of factory activity retreated 0.7 points to 50.2, the lowest since May 2020, as factory orders contracted more than expected. Russia resumed its participation in the Black Sea grain export deal after Moscow said it received written guarantees from Ukraine that the safe passage corridor will only be used for grain exports. The United Nations coordinator for Black Sea Grain Initiative welcomed Russia's return. Euro area inflation surged to a fresh all-time high, reinforcing fears that a recession is now all but unavoidable. Consumer prices jumped by 10.7% from a year ago in October, far exceeding the estimated 10.3%. Want to know how the labor market is doing? Well, U.S. job openings unexpectedly rose to 10.7 million in September from 10.3 million a month earlier in September, painting continuous tightness in the labor market. U.S. worker productivity barely increased in the third quarter after steep declines in the first half of the year, while labor costs posted a smaller advance. Productivity, that is the non-farm business employee output per hour, increased at a 0.3% annual rate in the third quarter. Initial unemployment claims decreased by 1,000 to 217,000 in the week ending October 29th and hovered around historically low levels as the labor market held strong, despite a weakening economy. So now let me tell you how the housing market is doing. Let's check it out. Inflation and the resulting increase in interest rates continue to dent home sales activity into the fall. As per the National Association of Realtors, its pending home sales index, which tracks purchase contracts for existing homes, dropped by another 10.2% in September, the fourth straight month that the index has declined. The month's reading, 79.5, is 31% below the level since 2021. Meanwhile, MBA mortgage applications index fell 0.5% in the week ending October 28th after falling 1.7% in the prior week. Purchases were down 0.8% after falling 1.5% in the prior week. Refinance increased 0.2% after falling 2.2% in the prior week. Okay, so let me wrap it up for you. Even though the Fed's projections suggest hikes will stop next year, the benchmark rate is expected to remain far above the neutral rate for at least 2 years. So you're going to need to buckle in, okay? Because the Fed's bumpy ride is not over yet, people. Well, that's all I have for this week. Please join me again next week for more market updates. Stay updated with our news, and our trading desk will keep you informed with pricing incentives. Happy Friday, everybody. Have a great weekend. Buffy out.